Balance your trading strategy by adding futures. CME Group helps you manage risk and capture opportunities in all market environments. Capitalize on around-the-clock access to highly liquid global futures and options market across all major asset classes. Just visit your online broker and get started. Plug into valuable educational materials and trading tools and see what adding futures can do for you at cmegroup.com/onthetape.
Hey, this is Dan Nathan. You're listening to the podcast version of Trading Spaces. It's a live Q&A that I do with my On the Tape co-host Guy Adami every Monday and Wednesday at 1 p.m. Eastern on Twitter Spaces. We hope you enjoyed this episode, and thanks as always to our presenting sponsor, CME Group. It's top of the hour. It's 1 o'clock on Wednesday. That means that Guy Adami and Dan Nathan do Trading Spaces on Twitter Spaces. They're sponsored by CME Group. They're the sponsor of our podcast On the Tape. We do this every Monday and Wednesday at 1 p.m. Eastern, and then we put it in the podcast feed. We've been putting it in our On the Tape podcast feed, but as of Monday, January 3rd, it's going to have its own podcast feed. It's going to be Trading Spaces. So look for that in the podcast stores. Please follow it. You can follow the @_Trading Spaces on Twitter. And that is going to be something that it's going to be a primary destination for Trading Spaces. We do these to just really talk markets while they're live. If we have opportunity, we take questions, but we really want to kind of just give a little bit of some of the stuff that we're looking at. Right, Guy Adami? So here we are.
And I'm going to tell you what I'm looking at, biatch.
All right, let's do it. You're all fired up.
I am fired up because, crude oil, Brent crude traded back above 80, I believe. That's something to look at. And, the volatility, again, I know Dan Pitt gets upset at me when I mention this all the time, but 10-year yield a week and a half ago traded down to 133. They're back north of 153. I mean, just crazy moves in short periods of time. And that 2-year has been flirting with 80 basis points, which would make it a 4-bagger since September. And we talked about it on Fast Money last night. We'll probably talk about it again. To me, the most important thing to look at going forward, and seasonality obviously is playing into what's going on in the broader market this week, but is going to be interest rates in the 210 spread, Dan.
Yeah, I don't get mad at you about it. I mean, listen,
you get mad.
No, I think your insights on yields is really important. I'm just a dumb stock and options guy. I mean, I don't, so for me to have, to be in this sort of no, but
now
listen,
you're insulting.
I'm not. To be very frank, I do agree that the volatility off a low base is definitely it can be eye popping some days, right? And so, your point has been very simply keep an eye on the twos. That's telling you as far as the pace of quantitative easing or the tapering thereof and the expectations for rate hikes in 2022. So I agree with you. I just don't think, and I think I said this on the tape on Friday, which you were not on, Guy. I don't know if the 10-year U.S. Treasury yield or at least Fed funds will ever be above 2.5% ever again. Okay. I'm just telling you that. It just seems like to me from everywhere I sit. And then you look at this kind of the flattening of the yield curve, which is really what you're focused on over the last, couple months or so, making new lows, 52-week lows. I just think it really paints the picture of, just a really lower growth environment with maybe a little bit more punchy sort of pricing environment. You know what I mean? And what does that mean? It means kind of stagflation. So to me, I just don't know how we can have this pandemic cut, Q3 GDP in half, then cut Q4 GDP in half, cut Q1 GDP expectations for 2022, really. And we just have this framework where we think there's always going to be this second half surge in activity.
Yeah.
Before the pandemic, Guy, and I'll end this little rant right here, the Fed was desperate to get inflation up to 2%. You know what I mean? So it's going back there. And then before the pandemic, I think every administration or anybody in the Fed or whatever, they were dying for growth to be above 3% GDP growth. And you know what? We had a couple ticks above that here and there during, the last administration that had to do with a whole host of, the tax cuts and all the other bullshit. But at the end of the day, the 10-year average, Guy, of GDP prior to the pandemic was 2.2%. So that's where we're going as far as inflation maybe stays a little higher and GDP goes back there. So you tell me, what stock should be valued at in this network. I don't know. What do you know?
Well, that's a great question. Like, what's the right multiple for stocks environment that I think we're going to find ourselves in early next year? And we've been trading, a couple standard deviations away from historical norms in terms of, the multiple for the S&P 500, which I think, and Ivan the Q probably knows this a lot better than I, but it's probably around 17 or so, I would imagine. And we've been, flirting on either side of 22 for quite some time. So I think it's going to take some work to get it back down to 17, but the multiple is just too high, I think, in this environment. And I think we're going to start to figure that out early next year. Now, again, I think this last couple of weeks, the move higher has been based in large part on seasonality and a couple things, other things going on. But I think you're going to have a problem early next year because I think the Fed has made it pretty clear, they're not going to deviate from what I think is the correct path. It's just the problem is it's the correct path way too late in the game. So we'll see. I mean, I think I know what happens to stocks, but I've thought that for a while, Dan.
Yeah, I mean, so I guess the real question, Guy, in 2022 is that if there's any sort of black swan event that would cause the Fed to change from their like kind of hawkish stance, which you just said is late, and I think we can all agree, at least on the quantitative easing, like they kind of just overstayed their welcome. To my point about interest rates, I just don't think they're ever going meaningfully higher here. So they're going to have to get continually creative about how they attack, shocks to the system when they're trying to avoid like credit freezing up and all that sort of stuff. And so to me, if there is any unforeseen event, if there was some sort of geopolitical event that caused commodity prices to rip back up or something, and the inflation really was going to be sticking around here in ways that are kind of unhealthy to consumers and businesses, I mean, that to me is the thing. And you think about the Fed's balance sheet where it is, I just don't know. I mean, they're going to have to continue to get all weird. And we saw that with QE2, with QE3. Remember that, the twist and all that sort of stuff. So, you've said this on many occasions. We are in the midst of, this crazy financial experiment that it's not just us. Europe is involved in it. Japan has been involved in it for a long time. The Chinese manage their economy in all different weird ways here. So I don't know. So, Guy, listen, we're going to have Tom Lee on the tape next week.
Not.
Yeah, we are. And you and I focused on a report he had out yesterday about this variant and what variants basically in general, how the stock market bottomed when hospitalizations and the worst of the cases have peaked. And it seems like based on some other countries that had this variant prior, they've already kind of peaked. So he's expecting, a peak in the next week or two or whatever. But he also expects, like you just said, a very volatile first half of 2022 in the stock market. Are there any pockets that you think right now are getting way overdone to the downside, or some that you think, really you're going to see a rotation? And even if the broad market goes lower because some of the big generals pull back in, are there other pockets that might do really well?
Great. There's a lot in that question. So here you go. I think some of the Cathie Wood names have been just bludgeoned where I think, you still can't make a compelling case on valuation, but you can make a case that if you go back and look, a lot of those stocks sort of saw volume capitulation in early December. So I would look there, number one. Number two, and I've said this on the show and I've said it, I think, on Spaces, airlines topped out in April of this year when the news was at its best, when the vaccine news was at its best. And airlines basically went straight down ever since. Airlines have gotten off the mat over the last couple of weeks, today notwithstanding, when news seemingly is at its worst. So I've made this point, and I'm going to stand by this. I think in the beginning of 2022, you could see a huge move to the upside in some of these travel-related names. Expedia, for example, which is the E in the hope trade. So I think that works. And I do think, although I was wrong about energy, I thought crude would have triple digits handle by the end of this year. That's clearly not going to happen. But I still think energy is going to be a story, and I think you're going to see a continued grind higher. So I think the levered energy names and some of the OIH names like Halliburton and Schlumberger on valuation makes sense. So there you go.
You weren't so wrong on energy. I mean, you've had a good call on crude. I mean, although you've been steadfastly bullish in the pullbacks, and you're right when it
not to interrupt, that last pullback, that November pullback from the day after Thanksgiving, that Friday till recently, I mean, that was a pretty epic move lower in crude oil. Now, you can explain it. Obviously, the variant was part of it, and then the release of the SPR was the other part of it, and then other things as well. Maybe it got ahead of itself. But it's raging back very quietly. Nobody's talking about it right now. So I
Well, let
think
me
you
talk
really want
about
to keep
something
your eye
there,
on
though.
crude.
I will tell you, because you just mentioned oil services. I will tell you that I think, given the move in crude, you said Brent was just over 80. I think what oil service stocks are doing is horrible. I think that
Yeah, I agree
OIH
with that.
chart might be one of the worst looking charts in the whole market when you consider what some of the pressures are as it relates to the underlying. And then, so to me, I think that looks like a massive head and shoulders top. So that's why I remain really cautious on energy in general. I would say two things about your ARK names. There's two that are starting to really catch my eye. Okay, Zoom, which I think you and I have been correct on all year long. Investors were going to have to deal with that high multiple. They were going to have to deal with the fits and starts of kind of how work was going to be adjusting, right, as we kind of come out of this pandemic, which doesn't seem like we're ever going to come out of. But this stock, all of a sudden, maybe estimates have come in line with the price and the valuation a little bit, because next year, earnings and sales are expected to grow about 15%. And that's assuming that that's correct, okay? And this is a company that has 75% margin. They have $5.5 billion in cash. They have no debt, okay? So it's got an enterprise value of a little less than $50 billion. Now, that sounds like a huge number. It trades at 11 times sales. But I think, if anything, Zoom has proven that this is going to be with us like DocuSign is going to be with us. I've already signed 2 DocuSigns today, guy. And the truth is, like, I may never, ever want to sign a physical document ever again. So the question you have is like, are these standalone companies, or do they have to be part of a broader platform? You know what I mean? And maybe you see Zoom
Yeah.
and DocuSign and a few of these companies. So Zoom looks really interesting to me on a valuation basis. All of a sudden, at 40 times expected earnings and 11 times sales, and I know by a lot of metrics that sounds crazy. The other one is Chegg, and I think we talked about this too. This one seems reasonable, and if there's any, I mean, maybe this is part of a larger platform again. So I'm thinking about like some M&A, but also I think these companies, maybe the expectations have come in enough. Is that what you're kind of thinking of in some of
Well,
those names,
I'll
guy?
throw another name at you, and
Yeah.
I think, look, Teladoc, I think has issues without question. I don't think there's that many barriers of entry out there, and a lot of people don't like the business model. But I also, if you look at it, it recently traded down to what was a prior all-time high way back when. So this sort of 86 level, I think it's the 86 level in Teladoc, I think is pretty interesting. But the one is my eye, and you're going to think I'm out of my mind. Coinbase, and I think that's like her 8th largest holding in the ARK ETF. Maybe I'm wrong, I don't know, but I think it's definitely in the top 10. I think it represents about 4% or so of the holdings. Mark Mahaney has said that Coinbase is going to be the bank for the metaverse. Obviously, that's going to take some time, but if you look at the move in Coinbase, I mean, it has gotten absolutely bludgeoned. I think Coinbase is one that might catch a bid.
Why do you think that I'm surprised? Just, last week on my weekly that I do with Fidelity in the Money, check it out on my Twitter, people. I pitched Coinbase using options to express that view over the next few months, because here's the stock right now. It's back at about 250. That was its listing prices, direct listing IPO price, which doesn't mean a whole heck of a lot, but I do think it's interesting that the stock has been pretty volatile this year. And, we get this question, and I talked with yesterday on OK Computer, our new podcast. Follow it, people, in the podcast stores. Follow it on Twitter
That's, by the way,
at OK
great
Computer Pod.
Metallica song, by the way.
It is not. That joke is just,
I think
I want to
like,
OK Boomer you every time I hear it.
seriously, what group did sing that song?
Radiohead, it was an album in 1997, but it was OK, the letter O, the letter K. Ours is OKAY Computer. It's got a different meaning here, but it's a play on words. But I would say that Coinbase, to me, we talked about this yesterday with Packy McCormick and Jared Dicker. We're like, listen, there's still a lot of people in the stock market who are really interested in crypto and Web3, but they don't know how to play it, right? So to your point, Guy, about enthusiasm for these new tech themes or fintech themes or whatever, Coinbase is a way to play it. Now, there's many other exchanges. There's decentralized exchanges. There's others like, Robinhood has exchanges. So I like Coin too, Guy. I'm with you. I think it's a great way, kind of some of the momentum that you might have in some of the underlyings.
You should get Tom York on that and the Greenwood brothers.
Oh my God!
About how killer that would be.
Hey, can I ask you a question on one? And you and I have
absolutely.
been really, really skeptical on this name.
By the way,
all year long.
That was me dropping Radiohead knowledge.
I saw what you did there.
Yep.
You and I have been skeptical on this all year long, ever since pre-IPO and since its IPO in the summer. Robinhood.
Yeah.
I mean, this stock made a high guy of 85 briefly. It became a meme stock. Like, remember the week after it IPO'd, and it
Mm-hmm.
now is trading at 1713. It
Made,
traded at a
made an
low.
all-time low today, I think, of 1668 because I happen to look at it. Tell me I'm right because I think that's
Yeah,
pretty.
that's exactly right.
Look at me. Look at me. 'Cause I was looking at it earlier. And listen, I'm wrong all the time, as you've come to learn.
Yeah.
But this is one we've been spot on about. And I will tell you, and I've said it, and I'll say you haven't heard me say it. The only thing innovative about Robinhood is the name and the hair on those two cats. After that, it's the same stuff as everybody else. Like, I don't know why people got so excited about Robinhood. They did not, there was no innovation whatsoever. I think they just sold people a bill of goods. I guess good for them, but the stock has been grim death, and quite frankly, I don't think it's found its bottom yet.
All right, let's talk about fintech in general, guy, because look at Square. I mean, Square was
We don't call
kind
it
of
Square
rocking and
anymore.
rolling. Oh, we call it Block. Sorry,
Yeah.
bro. We call it Block. This stock, the day that Jack Dorsey announced that he was resigning from Twitter was November 29th. Okay. Square closed that day at 213-ish. It's trading at 162 right now. It's down from a high, an all-time high that it made in August of 289. Again, 162.
Yeah.
So Twitter stock rallied the day that Jack resigned. Literally, it was up 10% in the pre-market. Remember, people were like, "Thank you." And then Square has since come in, what, 20 some percent or something like that. What do you do with some of these names here? Because, again, I think the enthusiasm was starting to wane in some of these names, PayPal included. PayPal had a couple disappointing quarters in Q2 and Q3, I think, and the stock got hit each time. So is it valuation? Is it like we get it? Now there's a lot of competition. They put forward a lot of demand, or not demand, but like kind of accelerated the trends. And now the decelerating trends are the things that investors are looking at, and the valuations were just too extreme.
Look, here you go. I'll break down Square. Massive double top from February, when I think it was trading 270-ish, as you mentioned, and again in August. And we talked about that. We said, you armchair technicians out there, you got a potential huge double top in Square. That came to fruition. Next question is, where do you buy the stock? And I'm going to attempt to tell you where, Dan. In
Mm-hmm.
August of 20, the stock had a huge run, traded up to 156, and then stalled. So that prior all-time high is going to be support. So we're right there. I actually think you can take a shot at Square at these levels, and I think your downside maybe is 150, but I think it's getting pretty interesting. The other name, by the way, in the fintech world, and I think this is considered fintech, and I know you like this stock, and it had a huge run in the fall and then gave
Mm-hmm.
all of it back, is SoFi, which I think is
Yep.
trading at 14.5 bucks right now, which is remarkable given what's going on. So you had that huge run, I think up to about what, Dan, 24 or so.
$24 in
Yeah, and
November.
now
Yep.
and it's given the entire thing back. So I don't know. I think that gets interesting. I think that's interesting right here
I
as
bought
well.
some more on Monday, SoFi, and listen, this stock has like pretty decent support going back to earlier in the year, to $14 or so. I mean, could it go down to 12? That's where it was in early January. Sure. Recent company, recently public through a D-SPAC, a Chamath Palihapitiya SPAC.
You say that so well, by the way. I have trouble saying that, but
I've gotten to know him over the years. I really like the guy. Very smart guy. I've had the benefit of interviewing him on numerous occasions. So I just, I got it down. I like
roll,
SoFi
man.
too. It really feels like, some of these names, they have more puking to go on the downside. I will say, just on the tech front, guy, I think you and I just made the case why we should buy ARK for 2022. And I mean that really
No, I
seriously,
think
because
you're right.
it feels like those names. The one thing that bugs me about ARK is, we just talked Block, just Square is the 13th largest holding. The one thing that bugs me is the framework, that the way that they have to sell when it's down and buy when it's up.
Listen, I'm not going to tell her to run her business, but she created the wrong vehicle. I mean, an ETF is the exact wrong vehicle for what she's trying to accomplish. I mean, there are no gates there. If people want out, they hit a button and they're out. And it's funny. Somebody said to me, if she had conviction, why is she selling? I'm like, because she has no choice. I don't think people understand what's going on. I mean, I shouldn't say that, but I think you completely understand what I'm saying. It's not that she doesn't have conviction. She's selling because she doesn't have a choice. And that's what happens in these ETFs. So
Well,
I
I don't
think
know
the
that. I don't know how they structure it, but like for instance, at one point Tesla was like 12%, and that probably had to do with performance of the weight, and now it's like 8.25. Like I would buy that. I just don't want to buy. I wouldn't want to buy that. Like I want exposure to Zoom and Teladoc and Coinbase and Unity and Spotify and Twilio and Shopify but I don't want in block. I
Roku.
just
I know you're a
yeah,
huge
but
Roku. I'm a
well,
big Roku. I
I'm
love
not.
the
But
Roku.
that's the
I'm
point.
kidding.
If Tesla and Roku were 3% positions, I'd be happy. Like I'd be like, that's fine. You know what I mean? In some ways, so I just don't want to. I don't want to own an ETF where the largest holding is $1 trillion company that I think is probably worth half that. You know what I mean?
Yeah.
So
And cherry pick some of the names though. Like she's done the hard work for you, and I think in those names there might be some interesting ones. As I mentioned, I think Coinbase is on that list. I think that's one. And look, maybe DocuSign given the move that it's had as well. So we'll see. But we have I somehow I got made into like what do they call it when you're like running something here
it
like
means you're like a co-host. It means
and
you're
I
running
feel
it.
are we letting people talk or we I mean it's the end of the
Now,
year.
it's well, we got a lot of stuff to get through here,
Oh,
Guy
sorry.
Adami. So I
Please
mean
continue. I don't know.
that's
I'm just
great.
asking. Like I'm
All
just
right,
seeing.
let's talk about the setup in some in banks into the new year. It's interesting that the banks in general did not confirm the new highs in the S&P 500. Look at like a J.P. Morgan that was making an all-time high in late October, traded as high as like almost 173. Here we are at 158.5 or so. So it's still down. I mean, like what 8.5% or so from that all-time high is a function of this flattening yield curve. What do you think it is? Is it an expectation that growth might not materialize the way that some think, and therefore banks might not be the place to be? What's your take?
Well, as you know, typically the answer to questions like that are all of the above. But I think more so, I think I'll throw one more in. I think valuation has gotten in the way of J.P. Morgan just in terms of price to tangible book. I think people say, wait a second, maybe we've gotten a little ahead of ourselves in terms of where that's trading, and maybe there are other places to look. I think that's a big part of it. I'll tell you that, Citibank trading $61 wherever it's trading right now, about 80% or so, or 75% of tangible book. It doesn't make any sense. Now I get some of the European exposure they have. I totally get it. But we just traded down to levels we last saw in January of this year, that $58 level. I mean, I think Citi's worth a look. But the one name that I've mentioned to you,
Wait, hold on, Guy. On a 1 year basis, I mean, how did you not
nowhere.
mention an epic double bottom though? I mean, like
In,
literally
in
draw the line,
Citi.
as Carter Braxton Worth says, the lines draw themselves on
That's
that
what
one.
I just said. I just
Is
freaking.
that your stop though? Your stop at kind of $58 level. You do not want to be
Up.
long and below that.
Yeah, right. And I think it's worth a look here. So for sure. But the one we mention all the time, and you are fast to correct me when I called it a bank incorrectly, but Blackstone has pulled down from about 150 to I think it traded into the teens recently. Now it's back above 125. I think Blackstone, and people there. I mean, they're doing everything
Yeah.
right. So I think BX is a name that it's had some stumbles over the last couple months, but I think that's going to get back on its horse as well. But I think in terms of the answer to your question, this flattening yield curve is not particularly bullish. Slowdown in growth perhaps is a concern, and valuation for some of these names. They just got ahead of themselves.
I'd say just real quickly on the Blackstone, I would say that thing has room. It's going to be below 120 in the not so distant future. Maybe you see a double bottom near that October low, which was like 107, 108 or something like that. I just don't feel the need to chase anything. Like look at this kind of artificial move we've had in the last week in the S&P 500. Those things tend to correct themselves in the new year a little bit. And I think there's a lot of people holding out with some of these big names that are pushing the indices around with some big gains that might look to prune a little bit in the new year. Investors just have different mindsets when it comes to new year. They reallocate. Here's a group, Guy, that you
Hold on,
brought
before
this.
you, I know you want to talk about a group, but you mentioned prunes, and
Yeah.
I will tell you,
Oh no.
when you get to a certain age,
Yeah.
they're very important prunes, extraordinarily. That and Metamucil.
All right, Amanda, will you make a note here that we're gonna have to cut that out for the podcast store? Thanks, Boomer. A quick one here because you brought this up last week, and I actually, until you brought it up, I didn't really, it wasn't even something on my radar. The XRT, the S&P
Yeah.
500 retail ETF, and you were mentioning that for the better part of this year, after a quick ramp early in the year, it went sideways, very similar to the Russell 2000, the way small cap stocks had done. And it broke out almost to a T in November, the way the Russell did. But then it failed, and it came off really hard to the tune of like double digits. I think it went from 104 down to about like below 85. And this was just last week or a week and a half ago. What's your take here? Because I feel like there was heavy discounting. I feel like that there was a rush to early holiday shopping. I think there's going to be heavily discounting and maybe large inventories, as maybe a lot of retailers did a lot of double ordering because they were worried about supply chain issues. Is it as good as it gets for retail right now? And I know the consumer data is really good. I know that the retail data has looked really good, but is it backward looking? And is retail, which is outperforming today for some reason, is it going to have a tough Q1?
Yeah, that's a great listen. And you mentioned the levels, and I said that it's critical that the XRT holds 85, and it did that on that Monday, December 20th. That was the day you saw the huge downdraft in the market. But we did a Spaces that day, and I said, here's the thing you want to watch. The VIX at the time was 24.5, 25. I said, it closed below, 23.5, 24. I said, that's going to be a really good sign. That happened, and I said the XRT has to support 85. It did, and I said the IWM has to hold 210. It did, and you've seen what's happened since. In terms of the retailers, absolutely so much has been pulled forward. We talk about it all the time, but there's still some winners out there. I mean, you look at names, again, maybe extended on valuation, but Costco is just killing it, and people will say the stock is expensive. It's been expensive for a long time, and I think Target, for whatever reason, it's just gotten obliterated over the last couple months. But I think it might have found a home at these levels as well. And just in terms of valuation, I think Target's worth a look.
Yeah. Okay. I mean, that makes perfect sense here. We have a few more minutes before we get out of here, Guy. What is your take? We spent a lot of time in Q1 talking about all these companies coming public via SPAC. And I think what happened this year with that is that I think the Q1 2021 volumes in SPAC issuance was greater than I think all of like the last 10 years combined or something like that. Okay. And so all of a sudden, there was this big gripe that there were too few companies at M&A and companies going out of business and all this sort of stuff. I think in 2000, there were like 16,000 listed stocks in the US. And, coming into a couple of years ago, maybe there was like before the IPO and the SPAC boom, maybe there was like half that. Well, now there's a whole heck of a lot more. And I think investors have had a really hard time keeping tabs on a lot of these companies that have come public through these vehicles that they don't really understand, where investors, institutional investors, are basically full up because they've been investing in these companies as privates, they invest in the pipes, and then they come to the public markets, and then you hear this term bag holder all the time, right? Then the public buys them, but the institutions have already taken their pound of flesh out of them. And so a lot of these things are trading well below where they were trading, on their D-SPAC and at the $10 level with the warrants and all that sort of stuff. What is your take on these? I kind of feel like, Guy, that a bloodletting early in Q1 in some of these names, there are going to be some very, very unique opportunities where you're going to have doubles, triples, quadruple opportunities, and not a too long a distance of time in 2022.
I agree with that. It's interesting. Think about the last time we had a meaningful conversation about SPACs on Fast Money. It's probably 6 months ago. I would imagine it was over the summer, and we really haven't talked about it since. So, that flamed out. But I think to your point, I think they're going to be a huge amount of potential trades that set up early in the year. And I don't think, and you know this better than I do, but I don't think the final chapter in terms of SPACs has been written. I think they're going to, I don't know what it's going to morph into, but I think, 2022 could see some like SPAC 2.0 type of shit going on. So I'm with you on that one for sure.
Well, I just mentioned Chamath Palihapitiya, and I know that he's well followed because he basically has done, I think, almost 10 that he's listed in the last few years. The first big one was Virgin Galactic. This is a very controversial sort of name. The stock's trading at 13. It's very near like some lows. And, you tell me, I don't know if space is going to be a thing. I don't know if it's investable right here. But this stock at one point this year was trading trading north of 60. And then it had this move all the way down to like 15 and then up to 50, became like a meme stock. And here it is at $13. Okay. And then you're seeing another one of his names, Open Door. This is a company that, pretty interesting play on real estate. It was kind of the what's that company? Zillow, you know what I mean? Sort of situation here. That thing is getting killed. And there's another one. I mean, they're basically limping at the lows. You just mentioned SoFi. Clover was a little different one. Because there was some issues there, potential fraud. I don't even know what
Great song, by the way, by the great Joan Jett, Crimson and Clover, which was a remake. By the way, I know you don't want to talk about this, but Ivan the K likes to fricassee me whenever he gets a chance, and rightly so, by the way. But he said something really nice 8 minutes ago. He said, Gaia is 100. I think that means correct. So he did, I don't know how he made that happen, but he did Gaia is 100 in red with 2 lines underneath, on the active ETF being the wrong wrapper for investors, but for the asset gatherer, it's great. Thank you, Ivan the Q. Back to you, Dan.
Yeah, well, no, so I think the SPAC thing is something that you and I will be following up on, in coming trading spaces in the new year. Also, it'll be interesting to track, like DraftKings was one that's the stock that we've actually talked a lot about on Fast Money, and just this whole kind of move with legalized sports betting and just the fits and starts with, the pandemic and the gamification of markets and kind of the intersection of those things. I think that's going to continue to be an interesting theme here. All right, guy, we're going to get out of here, but let's just make a couple. Tomorrow, you, Danny Moses, and I are taping our last On the Tape of 2021, and it's going to be a really special episode because you and I are each going to give our best ideas for 2022. So check that out, guys. Follow us in the podcast store. It's at On the Tape Pod. Follow at OK Computer Pod, OKAY, in the podcast stores and on Twitter. Also, we got great episodes coming out there. On Thursday, we're also going to have a market call. The guy and I, we have a really great announcement to make about Market Call. It's going to be 3 days a week starting Monday, January. Yep, 3 days a week. We're going to do it Monday, Tuesday, and Thursday live. It's sponsored by FactSet, by CME, by SoFi. On Thursdays, we have Liz Young on with us. On Mondays, we're going to have Carter Braxton Worth on with us. So check out all of that stuff. You can follow that on Twitter at MKT Call. So we got a lot going on, guys. Yeah. You and I had a lot of fun doing all this, didn't we?
And I know you want to get out of here. I'm going to give you a couple of my best plays. Whatever you can short the Nets to win the NBA you short the Nets all day long. Short the Nets. And if you can get a price on the Rangers winning the Stanley Cup this year, jump now. Jump in now. Those are 2 of my best bets, by the way.
All right, Jack Dorsey is on a Twitter Spaces that's competing with ours. He's getting a little more attention. I'm going to go over to that one after this. But thank you guys for joining us. Thanks our sponsor, CME Group, and sponsoring On the Tape Pod. So follow us on the tape at OK Computer. Follow us at _Trading Spaces. Diaz, our crack producer and head of content at Risk Averse Media, puts out lots of great charts and data there. And also follow Trading Spaces in the podcast stores, because once we get done doing this, it goes in there. Thank you, Guy Adami. Happy New Year, my main man. I'm going to see you later this week on CNBC's Fast Money. And thank everyone for joining us. Thanks, bud. All right, bye-bye. Thanks for listening to this episode of Trading Spaces, brought to you by CME Group. If you like what you heard, follow us on Twitter at _Trading Spaces and join our Twitter Spaces every Monday and Wednesday live at 1 p.m. Eastern. You can also follow On the Tape in your favorite podcast store for new episodes every week.